coming along to the Strand this evening. So on my left-hand side here from Virginia in the United States is Nicholas Merton, who has come all the way over to see us. Nicholas isn't charging anything. He's here just to give information, to share what he knows and to try to educate and bring as many people in on cryptocurrencies and trading and Bitcoin and mining and all that kind of stuff. So I suppose I started communicating with Nicholas not too long ago. We said if you ever want to come to Ireland, come to Limerick. We want to invest in Limerick. We want to get as many people in the community here mining. We want to take a square footage here in Limerick in disadvantaged areas. That is say €3 a square foot, and we want to convert it up to €300 a square foot. So we were in the all areas of Limerick today, and they're looking around. We met Remy down in Limerick City Build, and exploring options of running data center mining facilities and employing people from Limerick City Build, disadvantaged areas, and that kind of stuff. So we great meetings, more meetings planned. We've investment planned from the States. So we've our first facility going in the Dock Road, probably within a week to 10 days. We've 2 test facilities running at the moment. So Nicholas was down there, had a good look around. So just before he goes on, a big shout to the guys from C Media here, Davis Printers, who have helped us out. Nobody here is here for direct money from anybody else. We're not here to sell anything. Nicholas is here to give information and to give knowledge at his own free will. All right, thank you.
I want to start off by saying thank you to everyone for coming out here and greeting me in such a kind way. This is the first time I've ever been outside of the United States and out of all locations, Limerick, Ireland, pretty sweet place. So I do want to say that I appreciate you all coming out today. I hope to explain at least the basics of what we have on screen, Bitcoin, cryptocurrencies, and blockchain. I think it's important, especially in these different parts of the world, that everyone understand at least some basic concepts in regards to what these things are. I know there's a lot of media talk in regards to Bitcoin and cryptocurrencies and blockchain technology. Some say it's a revolution, some say it's a bubble, and there's really no consensus, it seems, in the community because there doesn't seem to be too much information. Real quick, before we dive into everything, I just want to let you all know a little bit about myself. My name is Nicholas Merton. I go by DataDash on YouTube. I host one of the largest YouTube channels in the cryptocurrency space, and I've been extremely blessed to have only started it back in July of 2017, and it has grown to an audience of over 230,000 people, so I've been very fortunate for that. And some of you might be in the audience here tonight and have watched some of my content. For those of you out there, you probably know that I take a market stance on things. I focus on trading and investing in cryptocurrencies, and usually I don't spend too much time talking about the technology, which I'm also passionate about as well. Because I found Bitcoin recently, well, actually not recently, back in 2011, when I was learning about the traditional finance system. At a very young age, I started learning about how banking worked, how traditional stock markets worked, and how to begin investing at a very young age. So because of that, I by chance ended up finding about Bitcoin by a simple video called What is Bitcoin on YouTube. And I sat there and I watched it, and I didn't get a single part of the video. But I did pick up one thing, which was the fact that it was decentralized. And sadly, at that time, all I did instead of reading the white paper and understanding what Bitcoin was simply that I checked the price and I saw that people were paying $3 for a Bitcoin. As you can probably tell, the price has gone up since then. But I sat there and said, who would pay $3 for a digital coin? You can probably sense a pretty high level of irony on that. So today I want to go ahead and talk about what's important. It's not the price of Bitcoin and it's not the price of other cryptocurrencies. It's the underlying technology that is setting a new revolution and new precedence as to what we think about money inside finance, as well as a variety of other technological applications on the underlying technology, blockchain. So first and foremost, I want to spend some time to talk about innovations of finance, and this is going to lead us towards what we really want to focus on today. So as we look through time, there really hasn't been too many major innovations in finance. If we really think about it, there's only been about 5 major milestones that we've reached in our lifetimes, or within the history of humanity. First is commodity money. So commodity money was a way where different people of certain communities or tribes very, very far in the past would be able to exchange a sense of value between one another. And this could be in simple things such as corn, things like shells, or salt, for example. Some of these were important commodities that you could use on a daily basis. Some were not so important, but were seen important in the eyes of communities and tribes. But because of this, because not all commodities were consistently valued, a lot of tribes and communities could not do transactions with one another. They couldn't do trade. And because of that, commodity money was relatively limited. However, next up, humanity decided to find the thing that we all love, and that is gold. And due to the fact that it was a limited, scarce resource, and there was a proof of work that went into extracting gold and refining it, it was seen as a precious metal across the world and something of value. And because of that, gold made the perfect resource on a global scale to do commerce. However, gold has its flaws. It's quite heavy, and because of that, there's a few other reasons that we led to eventually having paper money. The story going to paper money is a long one, but we'll keep it short and just realize that we went towards using fiat currencies. This is the dollar, this is the Canadian dollar, as well as the euro and the pound. And then we embarked on a new revolution in finance where we were able to go towards making digital transactions with plastic debit cards. The interesting thing that so many people always continuously talk about in regards to Bitcoin is that the money is digital, and they have a hard time understanding that their money could be digital. But interestingly enough, the mass majority of all paper money in this world, or at least what we would call paper money, the dollar of any given country that's developed, is digital. When you swipe your credit card or debit card, you are using the mass majority of that type of currency. Most of it is not physical cash. And because of that, we are already entering into a digital age, and we have been for quite some time. But we're about to step into another innovation of money. And this is a very, very exciting time, and in fact, we are in the process of it right now. And that is with the creation of Bitcoin. In 2009, we embarked on a new revolution of money and rethinking about how currency should work. And it is due to the underlying technology of Bitcoin, not just Bitcoin itself, that is so exciting and something that's so valuable. So today I hope to explain to you all what Bitcoin is. I'm going to help you understand its underlying technology, and at least give you all a brief understanding that you can take away and understand, so it's not just simply some digital money that's worth nothing. So, what makes Bitcoin revolutionary? Well, there's a few main key components that really make Bitcoin unique, and it makes it a revolution in finance. First and foremost, it's decentralized. So, for the dawn of time in regards to making money transfers, whether it be from peer-to-peer as individuals, or if it be on a global stage, we usually have to deal with a bank at some point or another. We have to deal with some kind of clearinghouse that exchanges money between the two parties who want to make a transaction. And because of that, we can incur a lot of negativities. Not to mention, there is a trust in a centralized institution not only to usually hold our money, but to process that transaction properly. Along with that as well, Bitcoin is peer-to-peer. So this basically means that as we'll go through the video, we can see that Bitcoin can be sent from any two individuals without a third party, going against the previous factor of being centralized. Along that as well, this is a global payment solution. This is something that will allow you to send Bitcoin from here in Limerick, Ireland, all the way over into Shanghai within a very short period of time. Along with that as well, it is censorship resistant, and this is a very important key component within Bitcoin, is the fact that our transactions cannot be censored by any centralized institution or government. It is all on the Bitcoin network, and we can freely make transactions between any two parties whenever we choose. So, let's go ahead here and talk about an ideal transaction. If we really think about what we expect within a transaction, or what we would desire in a given transaction, let's say, for example, that Bob wants to send $100 over to Alice. Now, I think we all understand we would love the hypothetical situation where we could, whether it be right next to one another or on a global stage, send $100 to another peer. However, that's sadly not the case, because we all have something fun known as banks. And banks are never fun. They're always quite a hassle to deal with, as we all learned from 2008. So basically, in regards to banks, we have to go through a third party, centralized trust in between the transaction. So that's one of the big flaws right now. In any global transfer of wiring money, or if we want to make global remittance payments between different nations, which is processing trillions of dollars each and every week, because of this, we have to trust in this third party. And there's a lot of trust that goes into that third party when we make these transactions. Along with that as well, when we make global transactions as well as average everyday transactions as well, we can incur high fees as well as long processing times. Going back to that hypothetical situation of sending maybe a transaction from here in Limerick all the way over to Shanghai, that can take up to 3 days to process, and sometimes that money needs to be urgently delivered. Because of that, that can lead to a lot of setbacks. Along with that as well, of course, the fees are an issue, but the biggest issue is the fact that any centralized institution that's processing that transaction, or a government, can shut that transaction down. And that's not good, because it gets in the way of any two parties making free commerce between one another. So we have three major issues here that are getting in the way of our hypothetical transaction, what we desire. And the modern reality is not looking like it's a pretty picture in a world of technology. So let's go back to our hypothetical situation and see how Bitcoin fixes a lot of these issues. When we make a transaction with Bitcoin, let's say for example we're sending 1 Bitcoin from Bob to Alice, throughout this process we can actually fix a lot of these issues. Bitcoin itself has no centralized authority. We are not trusting a centralized institution to process this transaction. It's happening over the Bitcoin network. And we're going to get into more detail with this if it feels a little bit vague. I promise I'll get into a little more detail later as to how this happens in a trustless system that is rather based on computational power rather than trusting on a centralized institution or authority. Along with that as well, in these transactions, we can expect in most cases that we will have lower fees than traditional banking systems, as well as a lower processing time. Remember that transaction we talked about in regards to Limerick to Shanghai that would take 3 days? Well, we can send a Bitcoin transaction practically anywhere in the world within a matter of about 10 minutes. And that's extremely powerful. That's unheard of in the world of global finance. And third, Bitcoin is censorship resistant. And you're going to see this trend continue as we go throughout Bitcoin, as well as a lot of other important key principles in the sense of having true financial freedom with your money. So let's go ahead and spend some time to talk about the underlying technology of Bitcoin and really understand how it works and what makes it so revolutionary. Bitcoin isn't just digital money, it's network money, and it uses something known as blockchain technology. I'm assuming that many of you have probably thought of blockchain as the next buzzword outside of artificial intelligence and machine learning. It's tossed around everywhere, and people are saying that it's the next big thing. But many don't really understand the basis of blockchain technology and really what a blockchain is. So I want to go ahead and start off with that. So blockchain is basically what it says it is. It's a chain of blocks. So within each block in a given blockchain, there is data, there's information that's important to store. It tells a story as we build upon this blockchain, the change in information or the addition of new information onto the chain. And each block that's added onto the chain from the right to the left is dependent on the previous one, making it a chain of blocks. And we'll get into a little more detail to make this more understandable as we go. So let's go ahead and take a look inside a Bitcoin transaction. We can get a feeling as to how Bitcoin is sent across the world in a very interesting way, without a trustless without the need for a trusted third party. So let's say, for example, going back to our previous one, let's say that Bob wants to send a Bitcoin out to Alice. Very simple transaction. Nowadays that'd be a lot of money, but for simplicity's sake, in regards to nodes, you can actually run a node on the network. But basically what nodes do in regards to any given blockchain is they store a copy, either whether it be a part of the ledger or the entire blockchain. So in regards to this, if we have people, for example, who are fully validated nodes, they have an entire history of the Bitcoin blockchain, which is seen down below. Now, the Bitcoin blockchain has every single recorded transaction in the history of Bitcoin, from the day that Bitcoin was founded up to right now. And if you're a fully validated node on the network, you have a continuously updated ledger of every single transaction, knowing who has how much Bitcoin. Now, these nodes all have copies of the ledger, and they use this to build consensus in regards to verifying transactions between two given parties. So if they go back and they see that Bob, for example, doesn't have 1 Bitcoin, they're obviously going to cut him out of the picture and say, you don't have 1 Bitcoin. But if the nodes do see that Bob has 1 Bitcoin and he wants to send it to Alice's address, well, they're going to go ahead and send it off to the miners to be processed. And miners are the next step within the transaction. So as we go through here, miners have a sole objective. They process the next block on the chain. And inside this block, you're going to have a jumble of 1,000+ transactions on the Bitcoin network. So, for example, if we take Alice's transaction with Bob, that could be one of many transactions within this block. And that block is going to be eventually added to the chain, but it requires a high level of computational power. Now, why would miners put such a high level of computational power in regards to mining blocks for Bitcoin? Well, as you can tell by the icon, they're mining for new Bitcoins. And this is how there is a inflation aspect in regards to Bitcoin. There are new Bitcoin created every time a new block is mined. But as a certain amount of blocks is created over time, you're going to experience that, see the reward in regards to those blocks get smaller and smaller. And usually, as more people join towards the network, requires a higher level of computational power. We'll learn a little bit more as to why this is important later. But as the miners toss the transactions into a block and process it, it is going to be sent off onto the chain, and it's going to be linked with the previous blocks, adding on to the blockchain itself, and thereby validating the transaction between Bob and Alice. So, now that we understand that a blockchain is a list of, in this case for Bitcoin, transactions or data, let's go ahead and look inside an individual block and what goes into it. I don't want to go into the nitty-gritty details because the average person doesn't need to know every single specific aspect of a block. But there's really 3 major key components. First and foremost, you have the data. You have the transactions on the given block that you want to fit in and add onto the blockchain. So for example, this will be a long list of transactions such as Bob sending Alice 1 Bitcoin, or for in this case, Sarah sending Craig a certain amount of Bitcoin as well. And after this, it's going to generate a hash for the block. So the hash of the block is going to be created from taking all of the previous information within the block, various things such as transactions, and hashing it out within a certain cryptographic algorithm that's going to bring out a specific identity for this block. So as you can see, it's a very long string of text and numbers, and because of this, it almost acts as a fingerprint. It's an identifier. It is unique to that given block, and there will never be 2 different hashes, 2 similar hashes on given blocks. So if we go ahead, for example, and change the transaction information in regards to Sarah and Craig, or we move, for example, maybe try to remove a transaction, or we change the numerical value of a transaction, that is going to change the hash. And we're going to learn why that's important in just a little bit. The last part is the hash of the previous block. And this lays an importance in regards to the fact that we're trying to build a blockchain, a chain of blocks. And as we go here, we can see that each block relies on the previous one. And with the previous hash of the block, it is going to connect with the previous one. So again, the previous hash is an identifier that it relies on the previous block after the previous one we saw on the list of blocks. Let's say, for example, now let's get into a little bit of a theory in regards to attacking the network. Let's say, for example, for Bitcoin, that I wanted to go ahead and go on the ledger and edit it and say that I had more Bitcoin in regards to a transaction. I sent, instead of 0.5 Bitcoin, I sent 500 Bitcoin to my address. Or maybe, for example, I wanted to remove a transaction on the ledger.
Well, if I do that, it's instantly going to make my copy of the ledger practically useless, because if we change a transaction in regards to any given block in the ledger, it's going to make all other blocks invalid due to changing the hash. Now remember, that block on the right-hand side has a copy of the previous hash, and in regards to changing the transaction, the hash has changed because we changed the information inside of the block. This also is going to be difficult because in regards to changing the hash, well, if there was no real serious computational power, it wouldn't be too difficult to go through and just redo all the blocks in the chain. However, we have to apply, in the sense of miners, a proof of work for every single block on the network. And because of this, there's a large amount of computational power that goes into mining a block, and it estimates 10 minutes with each block. This would mean that you would need 51% of all mining power and computational power on the Bitcoin network to try to do a double spend or to try to manipulate the ledger in any way. So because of this, it's practically impossible, and it would cost billions of dollars in regards to the electricity as well as the equipment that you would need to attack the network. So because of the fact that each block relies on the previous hash, there's a sense of proof of work through SHA-256. And the fact that each, in regards to the network, you're having a decentralized distributed network where thousands of people are holding copies of the ledger. Because of this, it makes Bitcoin's network practically immutable. Now, immutable is a term regarding to the fact that the ledger cannot be changed. Whereas, for example, a centralized ledger can go in, a centralized bank or clearinghouse can go through and change the ledger of something. Bitcoin's ledger is public. It's there for you to see. Every transaction is there, and you can go back and see transactions back from 2009, 2010, and 2011. So this allows Bitcoin to have a very secure network with a clear, transparent story of transactions that we can turn back to. So what are some different blockchain implementations? You know, we've talked about Bitcoin in regards to blocks storing transaction information, and this is, of course, a very great way to revolutionize the way we think about money. But blockchains aren't limited here. They can be used for a variety of different industries, some of which are multi-billion-dollar ones. First and foremost, global remittance. So this goes in regards to payments and sending global transactions of wealth. But seeing as Bitcoin and other cryptocurrencies are borderless, and this technology of blockchain is borderless, we can send global remittance payments, which is a multi-billion-dollar industry where people from different nations can send money back home. Along with that as well, we can talk about stuff like cloud computing. Blocks store information that we want to fit in them. They store data. So in regards to cloud computing, if on a distributed, decentralized network, we could store information on a variety of computer systems on the network, and they could be broken up into files and pieces that are not only encrypted, just like we would in regards to the data, but along with that as well, it's broken up. It makes it highly secure and makes it practically impossible for anyone to hack your personal information on the cloud network in regards to a cloud computing-based blockchain. Along with that as well, Internet of Things. This is a fancy term for practically keeping track of information in regards to weather, temperatures, or other variables. And this can be used for a wide variety of things, such as tracking metadata on a large scale, as well as being able to keep track of certain important factors, such as weather patterns, etc. Along with that as well, we have supply chain management. So in regards to sending certain items, there's a really great project out in the space right now called Wabi, where in China they have these RFID tags on given products. And these RFIDs act as antennas that you can scan on your phone. And with that, you can tell where that product has been on a geographical location. You can tell what factories it's been through. And much like being on the blockchain with transactions in Bitcoin, it's immutable. It tells you a story of where that product has been. So you can make sure that you're not getting counterfeit products. So a very, very powerful thing. And fighting in the counterfeiting industry is a multi-billion-dollar industry as well. Along with that as well, healthcare and insurance. So this is also another very large industry. A lot of people think that they can, for example, in regards to healthcare, you can build different forms of contracts on the network and stuff, and you can do different health insurance plans. A lot of people see insurance being a large industry on the blockchain in general. Along with that as well, gambling and betting. Now, in regards to gambling and betting, you could use something what's known as smart contracts on the blockchain. And these smart contracts will be stored on the blockchain and allow people to make agreements between one another that's executed in code and can take data from a variety of different sources. So let's say, for example, we were betting on a certain player scoring a certain amount of touchdowns. We would take the data and we would be able to link it into our smart contract. And if for example, if I was betting that the player would get 3 touchdowns, or if the other person was betting they get 1, and I'm correct, I would receive the funds. So we can put up money on the table, it's locked within the smart contract, and if I win it, I get the money. If I don't, and it goes to the other party, they get the funds back as well. So we can pretty much gamble or bet on anything we want in regards to the utilization of smart contracts. Along with that as well, we can use it for voting as well, making sure that seeing as the blockchain as well as the ledger itself that keeps track of all that information is immutable, we can go about making sure that people can't double vote or anything like that. And there's a variety of other applications as well that we can use this for. There's a lot of people who are exploring with the use of smart contracts as well as DApps, or decentralized applications built on top of the blockchain, that allow us to make a variety of different enterprise solutions for a wide range of industries that we still have yet to even see blockchain touch. So if we take a look at the cryptocurrency space right now, some of you might be well aware of Bitcoin. It's kind of the name that gets tossed around. However, there's a wide variety of other different cryptocurrencies. In fact, there's over 1,300 in existence right now. Many of them are worth practically nothing. Many of them don't add anything new because of the fact that practically anyone can create a cryptocurrency. But that's the power of it as well. It's a competition of currencies right now. It's a very new, exciting space. It's a little bit scary sometimes, and it's hard to grasp the real valuation of these cryptocurrencies. But they all aim to attack different objectives. Bitcoin started off in 2009 through Satoshi Nakamoto, someone who we don't know. It's a pseudonym. It could be a he, she, or they. It could have been a group collective that created Bitcoin, but we don't know. It was aimed, though, however, at utilizing a technology that no one really saw a purpose for at first, and that was blockchain technology, and using it as a means of payment on a global scale without borders, or any intermediaries trying to get in the way of the transaction. But now we're starting to see blockchain used for a variety of different applications, and it's a really exciting time to see all these different competing currencies, as well as the platforms that come with them, offering a variety of different services and applications utilizing this very, very powerful technology. Thank you all very much. I appreciate it. I hope I gave a pretty decent description on Bitcoin as well as blockchain. And if you all have any questions, please let me know. Thank you. Okay. Show of hands if you have any questions.
In terms of my use for Bitcoin, it isn't actually for investment purposes, but it's for more of secure money. My question is, how does Bitcoin secure the value of its money? Say if I 20 years of Bitcoin now, and 10 years from now, how do I know it's going to be 20 euros? Because the thing about Bitcoin, it's an investment. 20,000 tomorrow. Is there any form of cryptocurrencies that maintain its value over a long time? Or is it just sort of this investment?
Good question. In regards to sustaining valuation, I think that you will not find that with most cryptocurrencies now. And this is in regards to most emerging technologies. Something like Bitcoin, which has a dollar value added to it in regards to how people trade and exchange it, you're going to see periods of volatility. Is, for example, how Bitcoin within 1 year went from being around $1,000 all the way up to almost 20,000. It was quite a wild year in 2017, and because of that, this is a very new technology. We can't expect the price to be stable, and that's why many people speculate as to whether or not Bitcoin itself can be a stable currency. Now, I do want to mention as well, in regards to what you were saying and stuff about Bitcoin being a currency, it does have its flaws right now, and I think it's something important to mention as well. Bitcoin.
Say, for example, if you wanted to have a secure transaction of 20 euros today in 10 years, someone would have to create their own cryptocurrency, and you'd have to trust that person individually to maintain that value. Would that be a solution?
Well, the thing is, the market's always going to determine the valuation. If there's an exchange between, for example, dollars or euros, you're always going to have the market determine that. It's always going to be what's the last traded price. And if you have more liquidity in the market, hopefully things will stay more stable. Right now, Bitcoin is relatively new. You only have a few $1 billion in an average day trading Bitcoin and other cryptocurrencies. And because of that, it's not like traditional currency markets where you have trillions of dollars being traded in between one another. And I think that's what we have to expect right now. And cryptocurrencies, to be fair, are being seen as more of an investment right now. I think that's why everyone's buying Bitcoin. They're not buying Bitcoin right now because they want to go buy coffee down at the local shop and stuff. It's to make, you know, a decent investment and to grow your money. So I think that really defines what Bitcoin's becoming. I think it's becoming two things. It's becoming digital gold, as many people have tossed around, but along with that as well, a pool of liquidity for other altcoins, which is a terminology practically used for any other cryptocurrencies in the space. So as we see over time, Bitcoin itself, as it acts as a pool of liquidity where that money will liquidate out towards other cryptocurrencies that offer different types of solutions. It may be that payment solution you're looking for. But Bitcoin itself, I think, will never become that major payment solution because of a few factors. It lacks scalability. So in regards to Bitcoin, it was a great first test in regards to building a digital payment solution. And at the start, it could process enough transactions. However, Bitcoin can only process single-digit transactions a second. It's one of the biggest flaws of it, and that's due to the fact that the limited block size in regards to the blocks we talked about on the chain. They can only fit so much transactions in every 10 minutes a block is processed. And because of that, it's nowhere close to what Visa or MasterCard process, which is thousands of transactions a second. So we need to either increase the block size or we need to find another form of decentralization in regards to storing that information, but also not having to trust on a centralized party. So again, going back to it, I think that Bitcoin itself is going to struggle to be a payment solution. Maintaining that valuation, though, is always going to determine on the market in regards to it. So if in regards to the volatility, if you're concerned about the volatility and you want to use it as a means of payment, Bitcoin's probably not the best fit, at least not at this moment.
And then what's stopping governments from attacking the mining process?
Yeah, so in regards to governments trying to attack mining, pretty much anyone could attack the mining pool and stuff, but this is referred to as a 51% attack. And I talked a little bit about it in the presentation, but I think it'd be really good to go into some details on it. So 51% attack is basically when someone has enough computational power to outweigh all of the other miners and beat everyone to the chase of creating a new block. Because of that, you can lead to manipulations in regards to the ledger on the network. So because of that, it would take a very, very high amount of computational power. It's very, very unlikely to ever happen. You would have to spend billions of dollars, if not hundreds of millions of dollars, in regards to getting specific computer equipment that applies computational power to mining for Bitcoin. Along with that as well, you would need a ton of electricity. I can't remember the specific numbers, but it is quite a large statistic to where no government or no central entity would really be able to do it. It would take a lot to pull off, and I think we would notice early on if someone was ordering 1,000 different ASIC miners in regards to trying to take down the Bitcoin network or something like that. But yeah, so I don't see a 51% attack happening. Governments can't really stop it, and that's the beautiful thing about Bitcoin. It is so highly secure. The network has been secure ever since 2009, so transactions have been running smoothly ever since. And because of that, we now know, after all these years, that blockchain, at least the Bitcoin blockchain, it works. The proof of work gives it a sense of security. It makes it so it's immutable, and governments can't stop transactions. So it's a very beautiful thing in that regard. And I think no government would be able to stop Bitcoin in that regard, especially as the difficulty keeps rising. As more miners get involved, you have to have more and more computational power to outweigh for a 51% attack. Any more questions? Mm-hmm.
Just want to talk to you quickly about ICOs.
Mm-hmm.
So it would say somebody with a business idea that wanted to close an ICO in the next year or two, and we've got new platform tokens coming up. Is there any particular one that you would have more weight on launching it on, or have you any feedback to give on that?
So in regards to like launching maybe on like Ethereum or Neo, yeah. I think that Ethereum has been the premier choice for a lot of people because it's quite easy to create an ERC20 token. And then later on, if you want to launch your own platform and stuff, you can, of course, replace the currencies and stuff. But I would say for right now, Ethereum has remained consistent. It's remained as a transparent platform where people have been able to successfully launch them and, you know, eventually lead towards building quite successful projects. However, I would say it really depends on what you're trying to build. So, for example, in the case of Icon, from what I can tell doing my research on it, they're focused on building a variety of different decentralized blockchain communities inside of the Icon Foundation. And you have different competing enterprise solutions, so it's really not a one-size-fits-all. But I would say to look out for things such as Neo, Icon, a few other competitors in the space that could offer that. And really, it depends on whether or not, it depends on what you're building and whether or not that solution can provide for that. Because different platforms support different languages, they support a variety of different things that you'll need to consider when developing your ICO. Anyone else?
Sticking on the ICO question, do you invest, you never really talk about it. Do you invest in them yourself? And if so, is there any upcoming ones that you're really
Here it comes. So in regards to ICOs, the bad news is, well, the good news for most of you in here, seeing as most of you live in Ireland, is that I'm pretty sure that the regulation is pretty lax here. Most of you can participate in any ICO that you want. Back in the States, though, they are quite restrictive. And because of that, I truly haven't participated in any major ICO. Now, I have waited for ICOs to launch and invest in them when they hit on exchange, for example. And there's been a few big players that I've been really, really fortunate to invest in and make a high return on. However, in regards to participating in ICOs, I think that it's a wonderful opportunity. I just wish there was more, more laid-back opportunities in regards to the United States, and that regulatory agencies would kind of get off the butt of cryptocurrencies and let the innovation happen. However, I don't see it happening anytime soon. Nonetheless, though, there are a few different ICOs that you can participate in regards to the United States. If the token, for example, that is raising capital, or in regards to your ICO, if your token is a utility token, and what does that exactly mean? Well, if you're building a platform, for example, one that I really liked and has been a fan favorite of mine for quite some time was Substratum. This is one that I kept my eye on, and basically what they're aiming to do is decentralize the web. Well, in regards to the token itself is the life force of the platform. It is the life force to host your website on this decentralized platform. And if your currency that you're raising capital for is dependent to run the network properly or to functionally run something on regards to the platform you're building, you can actually do that in the US. So that was a project I really liked. I was really excited about Icon as well, which was the first South Korean ICO that had a lot of government backing. But as of right now, I think the ICO space is cluttered. There's a few interesting projects, but none that I've personally put my money in. But I will be sure on the channel to keep you up to date if I find any good ICO projects. People think I don't cover them enough. Yep.
Yeah, question. The Lightning Network is coming for Bitcoin. It seems to be leaning itself towards being a decentralized proof of stake. Do you think that's possible, or do you see it that it's going to be more centralized for payment channels? Mm-hmm.
That's one of the issues in regards to Lightning. I'm not someone to be negative in regards to innovation. I know a lot of people get controversial over the topic of bigger blocks or layer 2 solutions like Lightning Network. I really think that Lightning Network is exciting, but I think in regards to the Lightning Network, there is one issue, and that's the requirements for payment channels in regards to the Bitcoin reserves that need to be there for payment channels to operate functionally. And because of that, and I know this probably doesn't make too much sense if you haven't learned about Lightning Network, but basically, Lightning Network is a layer 2 protocol over the Bitcoin network that would make it so, for example, as we talked about, Bitcoin can't process thousands of transactions a second like Visa or MasterCard. This would allow users on the network to put their Bitcoin in what's known as a multi-sig wallet, which has the signature, the private keys of the two individuals who want to open up a payment channel. And this allows them to send a variety of transactions off-chain that get recorded. So it would basically remove the need for the high fees on the network or the long wait time. You can basically do instantaneous transactions. However, there is a serious issue like in regards to, which is the fact that on those payment channels that you open, there is a Bitcoin requirement for them. Because of that, what a lot of people are theorizing it's going to lead to you take a look at Lightning Network right now, you can see this on the map. They have a visualization of it online. It's really cool, of the actual mainnet doing transactions, is that a lot of them end up going towards a centralized hub in the payment channel. So if I want to send a transaction to you, for example, I would send it to this centralized hub, and it would bounce through the payment channel from the centralized hub to you. And these hubs are starting to look a lot like banks. That's a very big worry, because that's not decentralized. And if every payment is going through these very big central hubs, that could lead towards requirements that those hubs have of KYC, know your customer, and as well as things that might intrude on us just making simple transactions. It might be the banks of the blockchain. So because of that, I'm very worried about that in that regard. But outside of it, I think Lightning is really cool. They've worked with doing private transactions and unlimited, infinite scalable transactions with little to no fees. Sounds pretty cool to me. But again, I want to see it turn out and see people experiment with it. It's still very early on. And again, innovation takes time and stuff, and maybe they can work around it. But I do think the concept is cool. I just hope to not see that centralized aspect, because I got into Bitcoin off of the idea of decentralization, getting rid of the banks, and I don't want to see them touch blockchain or any other cryptocurrencies. All right, any more questions? Mm-hmm.
Hi there. The trading in drugs around the world is the currency is the dollar. Okay. So all of the illicit prostitution, drugs, betting, etc., the currency is the dollar. Surely the value of Bitcoin at the moment is due to the fact that it's kind of untraceable and you have it on your personal wallet. But surely if one sovereign government comes out and actually issues a cryptocurrency which is backed by one of the reserve currencies, then the value of all the existing Bitcoin, Ripple, etc., surely that will collapse, because you'll still have the advantages of the anonymity, the confidence of the blockchain, but that's backed up by one sovereign government. So Costa Rica or Switzerland or Turkmenistan, it doesn't matter who, actually starts issuing a cryptocurrency and backs it up with hard currency, surely then that has a big impact on the valuation of all the existing cryptocurrencies.
Mm-hmm. Okay, so that's two good points you brought up to talk about. First and foremost, talking about in regards to the fact of Bitcoin and other cryptocurrencies being used for illicit purposes. This is something that I think the media has really driven on Bitcoin, because, to be fair, it did have a history of this. Bitcoin really got famed back in 2012 and 2013 in regards to the Silk Road. This was a deep web website where you could basically buy practically any drug that you wanted, and because of that, Bitcoin was being used as a untraceable currency. However, the thing that I always tell people to keep in mind is how Bitcoin has not only evolved in the sense of adoption, but how governments have learned to track Bitcoin. Bitcoin is completely public. Every transaction that is made on the network will be there forever. Remember, it's immutable. So any government who wants to look back at those transactions can go back and find who is making them. Now, there's no name to it unless it's touched in exchange, for example. But people know now, basically, unless they're going out and they have an expensive mining rig where they can stay relatively anonymous, if they're buying their Bitcoin on exchange, and they're going to make a transaction with an illegal or illicit website and stuff that has illegal activities going on, the government can actually track that. The IRS will be able to track the ledger and watch where your Bitcoin is going. And if it goes towards an address for a bad product or service, they can actually trace back to you and understand that you spent that money. So that's one thing about Bitcoin. It's not very secretive, and because of that, there's been a lot of development on privacy coins. Now, there is coins like Verge, Monero, and a variety of others that have different methods of privacy that some people still use in regards to those illicit activities. And I think that there's always going to be a way that those things go by, much like how there is, for example, I got really chuckled up on the idea that Jamie Dimon, for example, who's the CEO of JP Morgan and Chase, he came out and stated how Bitcoin is for people in Venezuela and criminals. And literally a week or two later and stuff, they were found that JP Morgan had been caught in regards to one of its subsidiaries in money laundering. So, and this wasn't with Bitcoin, of course, this was with cash. So this stuff is always going to go on. It's always going to be an issue in this world because there's always going to be bad actors. Now, in regards to the idea of your second point in regards to a government-backed cryptocurrency, this is also a very important thing. And it goes towards the idea of really the two different types of futures we can have in regards to our financial freedom. Both of them are digital. We obviously know that, like I was saying earlier, that the mass majority of our currency that we use, whether it be the dollar or any other type, is digital. It's on our bank accounts, and we send it through our credit and debit cards, or through PayPal, or through Apple Pay, all these new innovations. And banks have been trying more and more to make it digital. But we also, at the same time, we like digital. We like convenience. So we really have two paths. The first one is going to involve one case scenario is the fact that they will be able to trace your entire financial history. They'll be able to take your transactions, much like how Bitcoin is, for example, in a public ledger, and be able to trace your entire spending habits. They can know where you shop, what you believe in, the things that you do and say. And because of that, there's a lot of people in the space like Andreas Antonopoulos and a lot of others who do fear that in the future, if this is all one centralized currency under a central bank or government, just like that, they can clear your funds, they can clear your wallet, and you won't have that freedom of finance. In fact, you'll be pretty much a slave to the traditional system that we've been dealing with for years, that system of trust. So it's not a decentralized currency, it'll be a trusted blockchain or whatever it is, or cryptocurrency. And there's a second future. A second future which involves a variety of cryptocurrencies, all operating on blockchains or other methods of decentralization, and that allow us not only to make transactions on a peer-to-peer network without any centralized trust, but hopefully ones that will allow us to have a sense of privacy, that will allow us to step out of this traditional system where we feel completely comfortable and fine with a centralized institution knowing everything that we say, do, or believe in. And one really scary thing, going back to my kind of example earlier, is the idea that, let's say, for example, you go to the wrong political rally, or you just do something that's against the system. They can empty your account. And that's the very scary thing with the centralized currency. So I think, in regards to your question in regards to government currencies, I think it's going to be the same exact issues we've seen with traditional currencies, and I think we will continue to see. Central banks have proven a long track record of not being able to provide stable monetary policy. And it's the same reason we had 2008 and a variety of other crashes in history. And I hope we won't have to learn from that again, and hopefully we'll learn our lesson from 2008 and go on towards building these cryptocurrencies that provide financial freedom for all of us. Okay, next question.
Can I ask you about wallet?
Well,
You know, and all the security, like you talk about there, that, with Bitcoin or whatever, that, it has all this inbuilt method of tracking. But then we have to build a whole network of wallets to mind everything that we're doing. But there's all of this, you need to have something on the wallet, you need to have, if it's so secure, why have we to go to such lengths to try to mine it ourselves as well?
Oh, well, you don't have to mine for Bitcoin and stuff. So basically, in regards to having a wallet, it's basically just like, for example, your pocket wallet. It's an area that you can store your funds. So in regards to mining Bitcoin, the miners process...
Mind it, I mean. Trying to mind it, not take care of. Take care of it.
Oh, okay. So you, sorry, crypto lingo's confusing. So you're saying in regards to keeping, yeah. Mm-hmm. Well,
Do we have to go to such lengths to do it? If there's so much security built into it.
Well, the thing about Bitcoin is your wallet is relatively, it's highly secure. The whole thing about Bitcoin and these cryptocurrencies is they're giving us an opportunity for the first time to step away from the almighty banks and give ourselves the opportunity to earn financial freedom. And that does come with a sense of responsibility. It's just like, for example, if you have cash on hand and if you want to store it under your mattress or store it wherever, you have to be safe about it. In regards to Bitcoin, for example, in a wallet, like I was talking about, you have your public and your private key. And that private key acts as a way, as a signature almost, to where unless you have that private key, you will not be able to make transactions on there. That private key is highly encrypted, and no one should be able to get access to it. The only way they can get access to that is if they use your password, pretty much your private key, if they have a way of getting into your password. And that's usually done through human error. So you just have to be generally secure about it. You have to know the wallet that you're using. And if it's a consistent wallet and everything, and you know, there's been a track record of that wallet being used, you should be good to go and stuff. In regards to a lot of the hacks, this usually comes in regards to exchanges. So exchanges have a lot of people working with the reserves for the exchange, and because of that, you can have very, very large hacks because there's a lot of funds in one place, and that, of course, leaves a lot of people to want to attack those exchanges rather than your individual wallet. So I have no feeling, I've never had an issue in regards to my Bitcoin being stolen, or most people haven't either as well, but it's mostly exchanges who have a lack of trustable security, or they don't put things in cold storage in regards to hard wallets, which is what I think, honestly, most people should do.
And, you know, talking about the different exchanges as well, there's so many different exchanges.
Mm-hmm.
It's very difficult for somebody to get into all of these.
It is.
You know, I'm a different generation as well, so I haven't been educated with the computer the whole way along, so it's, you know, even getting to use the laptop and getting to from where you start from and get in, and with all these different exchanges. Is there a way of, I don't know, did they amalgamate the exchanges or something? You wouldn't have to, you know, buy whatever project you'd like to buy into it without having to find that exchange. And then they have different rules, they have different screens, different layouts, and it's really quite complex for mainstream to come even near it at the moment.
That's a very good point. So one of the issues right now with all things new, usually, it's not as easy as it should be to get involved in it. One of the issues right now is you have a ton of different exchanges, and the basic process when someone goes through and buying a Bitcoin, for example, they usually don't go through the process of mining. The average person will open up a Coinbase account, or they'll open up some kind of exchange where they can exchange fiat currency, their dollars, for Bitcoin. And then from there, if they want to invest in a variety of other projects, they got to go open up a Binance account or a Bittrex account or a variety of other second-tier exchanges that allow them to exchange Bitcoin for other altcoins, the other cryptocurrencies that are available. And like you said, this is not practical for the average mainstream adopter. But there's good news for those of you who want to have a much simpler solution in 2018. Financial markets are moving extremely fast to bring about this solution. They are going out, and this is our trusted buddies on Wall Street who are going through and creating ETFs of all different types that will allow you to own Bitcoin, will eventually allow you to own Ethereum, other popular cryptocurrencies, or a bundle, much like a traditional ETF, in regards to maybe the top 5 cryptocurrencies or cryptocurrencies that focus on cloud storage. And that will be coming in 2018 and 2019. That's what's really going to lead and pick up mainstream adoption. Now, in regards to actually owning your coins, to be fair, with an ETF, you're owning a exchange-traded fund. It's just pretty much a different asset that you can trade. You're not really holding the coins. I think that that's going to come when there are more simpler platforms to go out and buy those, and I think that's going to happen with decentralized exchanges. But for now, it's quite hard to transact because you do need to make a fiat transaction with dollars, and then from there, if you want to trade altcoins, Coinbase and all the leading exchanges usually don't have that wide variety of options. There's just so many that it's hard for exchanges to keep up, not to mention the regulatory barriers because you're making dollar transactions. But I think the ETFs are going to be the very first step to really start seeing that. We've already seen Bitcoin futures launch this year, so that was a very good first step for Bitcoin. And showing that financial markets are not only eager to get a piece of the action, but also have something ready for their client base when they want to invest. So it's going to take time, but I think into 2018, 2019, and 2020, that's when we're going to see mainstream adoption, and I think that we'll have all the tools ready there for people to invest in it. Yep.
Would you mind saying a few words about whales, like what they are, and whether or not you think they have an influence on the market, whether or not they use bots, or what impact that has?
Mm-hmm. Yeah, so whales are a pretty generic term that gets tossed around in the cryptocurrency community. It's pretty much what it sounds like. Whales are generally large players in the space, very massive, or groups of very large players in the space that come together and they lead towards a sense of market manipulation to profit. And this is usually done through pump and dumps, which is something that happens on, used to happen in traditional markets, but is highly illegal. And if it does happen, people face quite bad restrictions for that, and can face legal compliances. However, in regards to cryptocurrencies, and this is one of the things that I would like to probably see a little more regulation in, is the fact that there is no regulation in regards to coordinated efforts to move the price of cryptocurrencies. It's a very scary thing. Because of that, there's a lot of people who come together without any moral repercussions, and they come together to manipulate price. Now, there is really no way as of now to stop this, and especially as we step towards decentralized exchanges, exchanges where we won't need that centralized trust of an exchange to transact cryptocurrencies. This will continue to still be a problem, especially while the market's young. So, in a general sense, whale is someone who can have a very large impact on the market. It is definitely worrying because it can lead towards manipulation in regards to overhyping certain news, just moving price out of nowhere, and it can lead to a lot of investors falling for a rise in price. So let's say, for example, a large group of Bitcoin holders, they went and they found an altcoin that had a very low market cap. Well, start buying it up like crazy and flowing Bitcoin into there and saying, I want to buy every bit of this altcoin that we're looking at right now. I want to buy every single bit of it. And the price starts skyrocketing, and it's going to attract new investors in. It's going to attract the fool investors, the people who are going to buy at a higher price. They're going to start buying up the higher priced cryptocurrency from these whales who are going to start dumping at the top. And then once they really start loading out their holdings in regards to that cryptocurrency, the price will start to go down. And all those people who got tricked into it are going to be caught holding cryptocurrencies, and they're going to be down 50 to 60% on their initial investment. This is why I always advise people, first and foremost, if you have any sense of morale, not to partake in pump and dumps or talk with whales. I've talked with people who have communicated with them, and they've said that they are heartless. They're just like people in traditional finance sometimes. You get some people who just care to make money, and that's not what cryptocurrencies are about. And the second thing as well is to make sure not to get caught in the hype of things. If you are going to trade cryptocurrencies, if you're going to invest, this is something that I always advise and I talked about in one of my trading videos, trading cryptocurrencies for intermediates videos. Do not either participate in pump and dumps, and make sure to not get carried away when something's gone up 80 or 100% within a 24-hour period, because that can happen in cryptocurrencies. It's very volatile right now, and it can be led towards market manipulation. So.
Thanks for coming to Limerick firstly, Nicholas. And just in relation to the altcoin bull run at the moment, how long do you think it will last into 2018? And do you think there will be an existential kind of factor that might affect the altcoin rally in the last 12 months?
That's a good question. I love talking about this and stuff on an investment perspective, because a lot of people ask me, do I buy Bitcoin or do I buy a bunch of altcoins? It's usually the general question that I get asked. And in regards to altcoins, if we take a look, I don't know, for those of you out there who might trade or invest already in cryptocurrencies, you might know that alternative cryptocurrencies have been going to the moon. They have been gaining billions of dollars in valuation over just the past month of December. It's been one of the greatest bull runs we've seen in cryptocurrency history. And because of this, many people have been asking, is this like the death of Bitcoin? Is this going to last forever? I say that it will not. And I think we're getting quite towards the end of that rally for altcoins. I talked about it on my channel, how I had locked in a lot of my swing trading positions in regards to altcoins, and I moved that into securing my long-term position for Bitcoin. Because the market tends to move in cycles, and this goes back to what I was talking about in regards to Bitcoin acting as a pool of liquidity. When there are more high-risk takers in the market, when there are people who are willing to bet more on riskier bets, you're going to see that capital and that valuation from Bitcoin flow into altcoins, a variety of altcoins, because there's so many. There's 1,300, all proposing their optimal solution for a variety of different industries or a variety of different things. And because of that, when people are gambling, when they're speculating, you're going to see that capital flow out. But when things get a little too good, when everybody's having a good time at the party, they're drinking out of the punch bowl, when that punch bowl tips over, they're going to be stuck buying into a lot of cryptocurrencies that are way overvalued. And I think that's what we're seeing right now. We've seen altcoins, I don't know the specific numbers off the top of my head, but they've gained at least, I think, around $250 to $300 billion in valuation over the past month. And that's ridiculous. That's unjustifiable, at least in my opinion. I think it's irrational. But again, markets can be irrational, and you have to be a step ahead of the game. So I think Bitcoin, right now it's been hanging around 13,000. I think it's going for the up and up going into early 2018 in the first quarter. I think we'll easily touch the highs at 20,000 again, and I think we're going to be going for higher numbers going into 2018. We might get another altcoin rally though, so keep on your toes when Bitcoin is overextended. Remember that liquidity pool can flow right back into the speculative market and go into those altcoins again. And we can see a lot of new players rise into the space that actually offer real innovation as well.
Nick, do you not see a problem though with Bitcoin going on such a big run that it did before because of altcoins, because of the amount of people that are in this for investment purposes? So like look at the big institutions, they get in, it's at say 13 grand now, it goes up to 16, there's 3 grand on each Bitcoin for us guys, let's take it, and boom, it drops again. So it's going to stop the overall enthusiasm for just complete growth. It's going to keep stalling. Do you not see that as a serious point?
The interesting thing, and I think many people, some people would disagree with this, but this is tenet with most markets. The more capital that will come into Bitcoin and other cryptocurrencies, the more stable the price will actually become. And this was, for example, with the futures contracts and other institutional plays that are starting to come in. With this new money coming in, there will definitely be some upside. There will be a lot of buying rather than selling, and a lot of people speculating. But what's going to be nice is that the bid and ask in regards on the order book, in regards to trading and stuff, is going to have a lot more liquidity on each of those price levels. And because of that, the price will actually stabilize comparative to having it bounce around with very little liquidity in the market and having less volatility. I don't really see so much the movement of price of Bitcoin to be a problem right now, because it's not really a payment solution right now. It's really, like you said, people are investing in it, and it's just something you have to assess the risk for. This is still Bitcoin, of course, came into existence in 2009, but this is still a very early technology, and because of that, I think there's an added risk to it. But it's really asking whether or not you can take the risk. And I think eventually we will see Bitcoin not going up 3 or 4 times its valuation each year. It's going to be much more stable over time. And definitely as more liquidity comes into the market, that's what we're going to find.
Just to follow up on any external shock factors, long term, when the altcoin bubble does eventually burst, how many kind of coins do you see operating, functioning normally within alongside the currencies or in the whole crypto space?
I think in the long term, I could just toss out a number and stuff. Of course, I can't look into the future in that regard. I will say, though, that you are going to have what I think a lot of people in the space have been calling for, about 99, seeing as we have 1,300 cryptocurrencies, you're going to have about 99% of cryptocurrencies rendered worthless. They're not worth anything. Many of them are forks off of the original Bitcoin source code or pure coin, depending on just the different type of proof system that you want to have for your cryptocurrency. That alone cuts out so many. But along with that as well, many of them are just simply ERC20 tokens without unfunctioning platforms. They have nothing behind them. They're all hype. Because of that, you're going to see a lot of that dish out, a lot of this phony capital that's been raised or this phony valuation that's been put in the market fade away. And they're not going to go away. Cryptocurrencies really can't be permanently deleted. They're still there in existence, but they're going to be rendered worthless in that sense. I think you can expect a good 40 to 50 cryptocurrencies probably going to 2020 that really hold a steady amount of valuation and actually provide something of use in regards to blockchain or whatever method of decentralization they use.
Is there any way of knowing the current Bitcoin movement on it? How much of that movement is caused by, let's say, dollars or euros entering the market or the system, or how much of it's affected by somebody selling their Ripple or Ethereum or do that point?
That's a good point. So the way you can tell this, and for example, I give a great example. This would be in regards to looking at different exchanges and where the liquidity is coming from. So if we take a look at, for example, Ripple and its big price movements, for example, we can see Ripple go up, and this is a well-developed cryptocurrency, going up 30, 40, or 50% in a single day, and it's crazy. It's like, how is this thing going up billions of dollars in valuation? And we'll find that if we go on coinmarketcap.com or some other website that takes the API information from the exchanges, we'll see that the volume is coming from Korea, and South Korea has been a huge buyer of cryptocurrencies. There's a lot of money circulating there, and we can tell where the majority of that price action is happening when we see that big influx of volume coming in regards to a certain specific cryptocurrency. We can get all of the information. It's mostly all public, and because of that, we can track it. And the same goes, for example, different altcoin comparatives and stuff. If someone's selling a large amount of Bitcoin for a specific cryptocurrency and stuff, we can tell what exchanges it's happening on, and we can tell how much is being distributed and stuff in that regard. So Yeah, I mean, again, the information's out there and stuff. It's mostly in regards to transaction volume on different exchanges, and you'll be able to tell that quite simply because Korea will have at least 50 to 60% of the volume dominance in regards to how much is being circulated in that altcoin comparative.
Firstly, I love your work. Well done in the high quality content you produce.
Thank you.
Secondly, when I'm trying to do fundamental analysis on time, I look at the search tab in Twitter, search on Reddit,
Mm-hmm.
and I'll scan or read one paper. Just kind of, can you elaborate on your process for fundamental analysis of time?
Definitely. I think that a lot of people, I would say that a lot of people have asked me the general question of how I do fundamental analysis. And there really isn't too much rocket science to it. You first off have to have a sense of smarts. You have to just know how to smell BS from a mile away and stuff. And there's a lot of it in the crypto space. It's fairly. But the general process that I go through is I go through the important resources that I have provided for that cryptocurrency. I always make sure to read through the website, which can give you a lot of information such as their objectives, their team, their current timeline, and you can also read in through the most important component, which is the white paper. And if they don't have a white paper, you should probably not touch it with a 10-foot pole. But in regards to most projects, you will find a white paper. And in that white paper, you'll find practically all the information you'd find on the website, and much more in regards to the details of the project. And if you don't find the substantial factors such as actual technology or at least proof of concept of technology, and they're just selling you an idea, you should probably not touch it. You should probably stay away from it and try to find those who actually are showing a proof of a working product. Along with that as well, I'd always advise people to keep active with the project's GitHub. So for example, if a project doesn't have a GitHub displaying their content unless they've disclosed that they're keeping a closed source, it's very worrisome if they don't have an active GitHub where you see recent activity in regards to updates on that GitHub. And last but not least, I think a project that is keeping active with its community through social media, like you said on Twitter and Reddit, very, very important. Some people would say, well, pretty much any project can do that. Well, most projects who, for example, in this case of ICOs, if they raise $50 million or $60 million, or they raise, for example, maybe $10 million, but their token value that they hold is at least worth 40 or 50 million. If that's the case, they probably, if they were just there to raise money, they'll probably just sell it and go on a vacation to Bermuda. They don't really care about keeping active with their fans because they made their money, and they don't plan to take it off long term. So if you see that active social media engagement, that's a very important sign that, hey, here's what we're doing, here's what we're doing with the project, here's how we're evolving, and here's the timeline in which we're expected to deliver on certain things. And if they do deliver on those dates, those are extremely good signs, or if they have at least a predefined timeline. So again, just making sure they keep active, making sure you've read through the resources in regards to those cryptocurrencies that you're fundamentally analyzing, making sure that they have a solid team of A+ developers, marketers, a variety of other positions that are very important in regards to cryptocurrencies, and making sure that you yourself feel good about holding that cryptocurrency for a prolonged period of time, even if you're just planning to trade it. You should believe that there's going to be a functioning product if you're doing fundamental analysis rather than speculating and trading.
Welcome to Limerick, Nicholas.
Thank you.
And sorry, I'm coming from a stocks and shares background, so I've actually not an awful lot of knowledge on cryptocurrencies. But I suppose you're coming from Warren Buffett, obviously, has a lot to say about cryptocurrencies. But I suppose that it is very new, and I suppose if you go back to the dot-com bubble, you think of like all those companies that started up and they were worth nothing. They were worth fortune for a while, and then they went bust. I suppose I just have two questions from my point of view, starting out and just investigating at the moment. But I suppose one thing is brokers and buying cryptocurrencies. I suppose Coinbase, what you mentioned earlier, would be a good one to start out with. And I suppose the second thing is to ask the question about tax, capital gains tax, as regards people making money on cryptocurrencies, and are governments going to allow people to make money without paying tax?
Okay. That's a good few things. First and foremost, in regards to the reference to the dot-com bubble, this is something that I usually talk about on my channel. I'm not not wary of being a critic to cryptocurrencies. We are in a very speculative period right now. Right now, there is not a mainstream adopted cryptocurrency. There are some currencies that could be what Bitcoin claims to be a decentralized digital cash, in a sense. That's at least what Bitcoin's objective was in the white paper. There's a lot of cryptocurrencies that promise very high ambitions and they still have yet to deliver. And that's the mass majority of players in the market. There's a lot of crap in the market. And because of that, eventually it will flush out, whether it be a slow process or, like in the case of the .com, ran up very quick, came down very quick. And I would assume that would probably happen with crypto as well. But in regards to exchanges, in regards to capital gains, I think that's an important thing to notify as well. I, more than the next guy, would love to not have to pay taxes on my cryptocurrencies. I would love to pay as little as possible because I think crypto should be separate from the system. You know, if you're buying cryptocurrencies, you know, you want to be separate from the traditional finance system that's very tied with the banks and your government. However, if you're making a fiat transaction, for example, you have to consider that because you're exchanging dollars. It's a dollar exchange transaction. The IRS is going to want you to pay up in regards to the profits you make if you cash it out. Now, there was a recent change in the tax law, and this is quite silly. This is something I disagree with. In the recent tax bill in the United States that makes it so when you exchange altcoins, for example, let's just say, for example, I'm exchanging Bitcoin to an altcoin. I'm not touching any dollars yet. However, you are going to now, under the new tax law, have to mark that down as a transaction that is taxable. And this is one of the very unpopular parts that I do not like about the new tax bill. It's nice to see income taxes go down and everything. However, this was something that was kind of slid into the bill. And now we need to mark down the U.S. profit, U.S. dollar profit, or whatever fiat currency you're using, or at least in the U.S. dollar, because I guess we're talking about the U.S. here. Because of that, you're going to have to mark that down for every single trade that you do. And that's a very scary thing that they're enforcing that. I don't think they really can enforce it on a large scale, but more than anything, I would advise everyone, of course, as a legal Samaritan, to pay your taxes promptly. I'm not going to encourage people to avoid their taxes. That's not my job. But again, I think that governments are going to find it increasingly hard as more privacy implementations come on markets. When decentralized exchanges come into fruition, and there's privacy implemented on it as well, whatever method they use. If you can make private transactions between you and I, and the government can't see that, and we are able to use this through privacy coins or private atomic swaps, if that's the case, then governments won't be able to track it until we make that fiat transaction, as he stated. If I put $1,000 into cryptocurrencies and they somehow lose track of where my Bitcoin went or my other crypto went, and then they see me come out with a Rolls Royce and $1 million, they're probably going to detect something's been up, and I'm going to have to probably pay out. But if you really believe in cryptocurrencies, if you believe in stepping out of that traditional economy and stepping into the crypto economy where we can have a sense of privacy, we can exchange between different cryptocurrencies, and you're willing to stick with that volatility for now until it stabilizes, I think that it's going to become increasingly harder for them to track those transactions. So.
Do you think privacy coins are going to be a buy this year then because of that?
I think privacy is going to definitely be a hot topic. I've been talking about it since the summer of this year. That's a very, very good point. In regards to private transactions, in regards to governments getting more in control of tracking the ledger, Bitcoin, like a few people have stated earlier, Bitcoin used to be practically untraceable. Governments didn't know how to track the ledger. It was still public, but no one knew what really Bitcoin was at the time, and that's how things like the Silk Road were able to run. However, it is all public. Anyone can see a copy of it. Every single transaction is searchable on any Bitcoin Explorer, and because of that, people are going to start turning towards privacy coins, whether that be Verge, Monero, maybe Dash, for example, that isn't exactly a privacy coin, but does have privacy implementations through private send. But I think, yes, privacy is going to be a very large topic. You were saying something, wasn't it?
Just to confirm the brokerage that you recommend to use.
Oh, the trading platform?
Yeah.
Yes. So for the initial platform that I use, I would recommend either Coinbase or Gemini to get your first Bitcoin. What's nice about Gemini is they tend to charge lower fees, and I've had more of a consistency. However, Coinbase does have a high level of security through storing the mass majority of their funds in cold storage, which is pretty much the most secure way you can store Bitcoin. And the secondary exchange I would use to buy all your altcoins if you want to speculate and get into a few other players than just Bitcoin and diversify, I'd recommend you use Binance. I originally had used Bittrex, but Bittrex has been lagging. They haven't been listening to their community. They do not bring on new exciting projects to invest in. And Binance is to the first and foremost front of listening to their community. They do community polls to ask what coins should be listed on the exchange. And then also they list a lot of the hot new projects where you can not only make a good return on your investment, but also the things that people are wanting to invest in, things that actually have long-term potential.
Can I suggest as well that tried to get into Coinbase. Server traffic was down quite a lot. It's very busy. But BitPanda is European based.
That's one thing. I guess that's true. I'm not. I guess I'm not talking to an American audience here. That's a very fair point.
Spend more money as well on BitPanda than you can on Coinbase.
Exactly.
If you start with 750 in Coinbase, which you can start.
Do it with a debit card.
Yes.
Yeah. Yes. So each exchange will have their benefits and their negatives, and it really does. There's a lot of great websites you can find and stuff, and it's literally simple Google search and stuff where you'll be able to find comparable tables that will show you all the benefits in regards to fees, in regards to limitations, and starting off with a new exchange. A lot of people have compiled great lists together. Maybe I should do a video on that in the future and stuff, and helping people from different areas and stuff find the best exchange. I'd definitely love to do something like that.
Yeah, there's a big screener for that came across. It's very good for giving you all the exchanges that every client is on as well.
It's very important to find the right exchange for you, because you don't want to be opening up 3 or 4. You can have 3 or 4 exchanges that you use, but if you make transactions on them, you've got to, at least in the U.S., you have to record all of that and mention that you have an exchange account with that, and it can become a big pain. But it's very right. Making sure to get the right exchange is important.
Could you just talk about practical real-world examples where Bitcoin and other altcoins are actually used as opposed to just investing?
So for example, in regards to cryptocurrencies that could actually scale, this is something that Bitcoin gets crapped on for quite a decent amount. A lot of people see Bitcoin as it's like, it's single-digit transactions. Where could we actually see a scalable crypto solution for payment solutions on a daily basis? One thing that I talked about on my channel a while ago, about a few weeks ago, was a currency called Remittance. And this is a cryptocurrency that doesn't use blockchain technology. It's decentralized, but it uses something known as a block lattice. And though I can't get into the mumbo-jumbo technical details on it here today, basically the block lattice allows Remittance to be transacted at 7,000 plus transactions a second. It can practically infinitely scale, and you can pay 0 fees. So, for example, on the video I did to showcase it, I had a friend who had invested in a ride block. He got 1 ride block, and we were sending it back and forth, the same ride block. We paid no fees, and they were instant transactions within 2 to 3 seconds. That completely outweighs MasterCard and Visa, and now shows that we can have a decentralized cryptocurrency that can be used as a means of a day-to-day payment solution. Now, in regards to a lot of the enterprise applications on top of blockchain, we have seen decentralized cloud storage platforms take off quite well. It's hard to compete with Amazon and a lot of other competitors because they are quite reliable. However, again, it's one of the issues right now. Outside of really remittance payments and more finance-based innovations, we still have yet to really see a lot of that tech come into the sphere in a serious sense that mainstream adopters would be comfortable to take on. So again, it's one of those things we have to be honest about in this space, is that I think it was Vitalik Buterin, who's the founder of Ethereum. He said, cryptocurrencies have just reached I think it was $500 billion in valuation or something. It's a huge milestone. He said, how many people have we unbanked? How many people have we banked that are unbanked? Meaning the 2 billion people in the world, mostly in deprived nations where they don't have a traditional finance system. They've been cut out of the system that we rely on. We have banks that we can go to tomorrow and get a loan for, whereas these countries do not have the base financial essentials to make a living. And that's because the banking system, one that I've been passionately against for quite some time, on an international scale has left these people out of the picture. And that's why you see these underdeveloped countries stay underdeveloped and they can't escape it. We need to, again, be very critical, not get caught up in the price so much, understand the technology and its flaws, and continue to innovate for it. And I'm willing to cut out the BS and stuff and really look for the real solutions. And there are a lot out there. But again, it's very early on. It's a very speculative market. And hopefully over the next year or two, we'll start seeing some really good projects come out. So I will say, as one of the figures in the space, to be fair, one of the spaces I'm very limited in is in regards to mining. I'll be completely fair. I've never actually set up a mining rig before and stuff. I've seen them before, understand how they operate on a fundamental sense. However, there's really two different, I think, approaches in regards to trading cryptocurrencies and doing a mining rig. A mining rig is something more long-term. You will have, for example, different methods to mining. You can mine what's most profitable in the short term. Some people do that, but most people mine a cryptocurrency they believe in. They mine a cryptocurrency, or at least put the majority of the focus in regards to maybe big players like Ethereum. Those are things like Bitcoin, a variety of other cryptocurrencies that they see doing well in the long term. Your hope is that when you're mining, you're going to be mining cryptocurrencies and taking this initial expense, and that the value of those coins are going to go up over a long period of time. Some people play it short term. I don't think that's very smart and stuff, just to instantly cash it out and everything like that. But in regards to trading and investing in cryptocurrencies, those in the term as well. Trading plays off of a short-term period, whereas long-term investing, you can just put capital into the market and buy up your favorite cryptocurrencies. I recommend that the vast majority of people, no, I'm no financial advisor, don't say that enough on my channel. But anyways, in regards to cryptocurrencies and getting a stake in the game, if you're going to do it early on, if you're going to do it a year from now, it doesn't matter. The mass majority of people, even though we all want to probably speculate and think that we can be that top 5 or 10% of people who can trade successfully, most of us don't have the time or the dedication to learn about how to advance trade markets in an advanced manner. And even if we do, sometimes we still end up losing. So I would recommend to experiment with trading if you want to do it, but for the mass majority of people and for the mass majority of your funds, if you're going to touch cryptocurrencies, in my humble opinion, I know that it's probably best for most people to invest long term, to look for the picture in the next 5 to 10 years. Now, sometimes you might have to move around positions. That's fine if something changes or the team isn't meeting to your expectations for that given project. Then you can always change it and remove it and cycle it into a new project. But again, it's very important to think more in the long term of things, because what we're seeing now is crazy, but think in the next 5 to 10 years what this is going to look like if you truly believe in the technology. All right. Anything else? Yep.
In terms of like, if your main reason to get into Bitcoin is privacy or these cryptocurrencies, is it worth investing in these laptops that offer security from tracing and that sort of thing? Is it worth just buying on a laptop and putting more money into software stuff to try and secure your information?
Mm-hmm. Well, to be fair with you, I haven't really explored with them personally in regards to private applications. I know, for example, there's a lot of phones coming out. I can't remember the name of it. There was this one. Huh? Yep, yep, that's what I had heard about and stuff. And there was a phone where it's quite secure and stuff, and you won't have to worry about malicious attacks on it and stuff and getting your private information.
Purism, for example, I know the fact that aren't fully secure. It's more investing into developers who make things more secure in the future.
Yep.
But still, again, if you get Purism from a laptop, if the government wants to track you, they have a very, very, very difficult time. They have to get 10 people just to get one bit of information out of you. That's not fully secure.
Yeah. I think, well, there's always a way to probably crack into something. I'm no security expert in that regard, but yes, I think, again, there's ways that you can make it much more difficult. And for example, you know, outside of just buying expensive equipment and stuff, there's really just good practices in regards to keeping your cryptocurrency safe. Making sure that you don't leave your password somewhere or make your password something that's very easy to break. So you want to make sure it's something complex, something that's different, and making sure that you also, as well, if something happens to your wallet, that you have the seed for it as well, so you can reactivate it later. However, again, I think best practices is just to be very, very cautious about where you type things. Don't usually go on like public internet connections. That's another big concern, that people hack your computers or hack your phones in that regard. You want to stay off of public networks and usually use cellular data, unless you're on your home network. And I think those are some of the best practices you can do outside of spending a lot of money on hardware, because I'll be honest, I'm not an expert in that field, but maybe there could be some stuff out there that could really be worth it in the long term.
For me personally, I don't care about hiding my stuff. What I care about is just consent of government having access to information. I could care less if they ask permission to get my information, but more of the concern of going to Bitcoin to hide my transactions. They just don't having to advertise to me, for example.
Yeah, no, I can get that. I'm someone I'm big on privacy as well and stuff. I'd much rather not have governments tracking everything that we do. The fact of the matter is, though, and stuff, the public ledger is what I would say is still a concern, because if you buy off exchange, they're going to be able to trace that history easily. If you buy on Coinbase, let's say for example Nick buys $1,000 on any given crypto exchange, especially Coinbase, the IRS is in their pockets, and they're going to say, okay, Nick bought $1,000 in Bitcoin and he sent it to this address, and they'll be able to track it all the way through and know that that's probably my Bitcoin and what I'm spending it on, if they know what those addresses are tied to as well. But again, any added security can be good.
So as I would say, there's no way to 100% have privacy today, but with the innovation, with Purism offering their expensive laptops to invest and also get a laptop, over time you think you might get privacy?
I think it's going to have to do more with software rather than hardware. It's going to be in regards to using privacy coins, or if Bitcoin, for example, goes through the process, if the miners agree towards making an update on the network of updating Bitcoin with privacy features. I think that would be a good step for Bitcoin. It's just not the topic of discussion. Right now it's scalability. And there's other coins out there that are not only more scalable, but can have privacy implementations on them as well. I guess I'll go ahead and answer about 2 more questions, then we'll probably wrap this up. Mm-hmm.
When you look at the first generation cryptos to the third generation, is there much of a difference? Is it hype, or is there actually, good innovation coming along from the third generation?
That's a very good. I wish I honestly in the video would have talked about first, second, and third generation cryptocurrencies, because it's a very, very interesting topic to see how different blockchain-based projects are evolving. First and foremost, you have first-generation cryptocurrencies, which were such as Bitcoin. They're very simple. They allow you to send transactions between one another. Bob and Alice make a transaction and are able to send Bitcoin over the network. Then you have second-generation cryptocurrencies like Ethereum that allow you to do 2 very important things: to implement smart contracts, so you can actually program contracts between you and another individual for a variety of things. I think a good example would be, for example, as we were talking about earlier, with gambling or betting. That's a very good way where it's basically going to execute, and we'll exchange the funds depending on what happens. And also building decentralized applications on top of Ethereum. The third generation is doing something that is going to fix a very, very big issue with Bitcoin right now. Bitcoin right now is not scalable. It has single-digit transactions a second, and because of that, it can't beat out Visa or MasterCard. Now, the reason why Bitcoin has been stuck at this level for so long is because the miners are the ones who determine upgrades to the network. They determine the direction of Bitcoin. And because of that, there's been a lack of consensus as to how they're going to solve this. There's been really 2 solutions, either layer 2 solutions like the Lightning Network, or increasing the block size, as in Bitcoin Cash. Now, this debate has been raging on forever because Bitcoin, in my opinion, has a terrible level of getting consensus, or a terrible way of getting consensus. Whereas, for example, third-generation cryptocurrencies like Cardano, which I'm very excited about, offer the ability to actually have a sense of a voting process on the blockchain. How they're going to do it, they're still working on it right now and stuff. Again, building the perfect voting system is not going to be easy. But in regards to third-generation cryptocurrencies, it's having a system of voting and making sure that there's a treasury system in regards to lasting in the long term. Because ICOs can do only so much. Once the funds run out, who's going to fund the project? A treasury can help generate those funds and continue to keep the project alive and continue to market it and develop on top of the chain. And yep, third generation can also have a lot of other additional features, but those are really the major ones, such as implementing things of scalability and interoperability with other cryptocurrencies and blockchains. Take one more question. Any more questions?
Will you just talk about how you got on in Limerick today and where you could see some investment coming in?
Definitely. So what was really nice is Ken and I got to spend some time. I don't know if I think I had mentioned at the beginning of the video or at the beginning of the presentation that this was the first country I've ever stepped into outside of the United States. So first off, I want to thank you all for having me out here. It's been a really awesome experience. There is a lot of things that I've gotten to see in Limerick. I've gotten to see the very traditional, historic style that Limerick has to offer. And as someone who comes from Richmond, Virginia in the United States, we have a lot of history as well. I really appreciate getting to see that. And I got to meet a lot of people today who have been working towards keeping Limerick on its feet, making sure that people have economic opportunities. And as someone myself who's been very passionate about traditional finance in regards to the fact that it's left a lot of people in a negative situation rather than positive, I try to look for any way that I can hopefully help people, or at least look for opportunities to help individuals bring back that opportunity that they've lost due to the past for events, for example, like 2008. And luckily, through Ken and the connections that I got to meet today, we met some awesome people who are working towards training people, giving them the skill sets. And I think that with all of this, I think there's a really awesome opportunity to bring blockchain and other decentralized technologies here to Limerick. Again, Limerick itself is it's a relatively small place compared to some places like San Francisco or New York City, but the innovation can happen anywhere on this planet. It really depends on people such as yourselves and everything to get involved in this space, to get involved, whether it be buying your first cryptocurrency or even going out and investing in mining, being able to start building mining rigs that start to generate cryptocurrency for the area that you live in and to help support the network. And these ways can not only generate wealth for the areas that you live in, but along with that as well can also help to secure these ideas that we have for decentralization. So I think that Limerick could be a really good hotbed for that. I think we need to look for ways to get Limerick and other areas more involved in cryptocurrencies. And I think that over the next few years, it could be a really hot spot for cryptocurrencies in Ireland. It may be able to be at, could beat out Dublin as well. We'll have to see. Maybe there'll be a competition between the two cities. But yeah, so I'm really excited about the future of cryptocurrencies and blockchain. I've had a wonderful time getting to talk to you all today. This has been, I apologize if there's been some moments and stuff where I've been a little bit sputtery or maybe misspoken a few words and stuff, because this is the first time I've ever done a presentation like this. I usually sit in front of a computer and talk to an audience, and I usually start off with a snap, and I usually just, start off and just ramble on to the news and stuff without stopping. But it has been a phenomenal opportunity to talk to you all and to hear from you guys the questions that you have, because I know there's a lot of questions. It's an exciting space. But I hope I was able to alleviate some of those questions and give some good answers, and to hopefully give you guys a better understanding of cryptocurrencies, blockchain, and the thing that's taking over headlines, Bitcoin. Thank you all. I appreciate it.